Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, before 4 o'clock in New York on Monday, the 16th of December, 2013, and this is the daily report for gold and silver. Although well off of their highs, we do have gold and silver showing positive gains this morning, with gold currently trading up about $2.50 on the day, the low $1226.90, and more importantly and significantly, the high $1252.90. You can see that up right here. I have a feeling you'll have an idea of what we're going to discuss with this resistance area that it seems as though gold has run into. But as I said, still trading up a couple of dollars. But as you can see, well off the highs, roughly $10 off the highs. Now, silver is showing a very strong gain today. It's up about 35 cents on the day. Also well off the highs, but currently trading right at around the $20 per ounce mark. The low $19.40 and the high $20.39. I want to draw your attention to a 60-minute chart, same 60-minute chart we used on the opening. However, I have compressed it so we can show a little bit more time in there. We have identified, based upon a Fibonacci retracement, that 1252 as well as 1260 are pretty important numbers in terms of current resistance areas. Now, these fib retracements were simply created by using two different retracement points. First retracement point starts at just below 1300 down to this particular low at 1225, and then the second one goes down to the low at 1211, and that's how we get these two bands at 1260 and then again at 1252. Obviously, if we just simply look, 1252 is really the real critical number we need to look at. We talked about the fact that we had basically three or a triple top in the market each time it came up, tried to test this area, it could not. We then had our quadruple top, and that was really followed by a time in which we broke not only above that particular area, when I say that I mean the 1252 here, but after breaking above 1260, makes it to about 1265, I believe. It comes down, and you can see where we had some resistance right in here as the market genuinely traded sideways for a little while just prior to breaking down and breaking below that. Now, what is interesting to me is that now we have seen really strong resistance in the area. As the marketplace comes down itself, what we found is that we had some significant support come in the market, and that was really at 1225. Now, the market did dip below that. There's no doubt about it. Now, it wasn't as pure of a bottom as we saw here. And here, of course, we've got just a lot of noise in the market as it's trading in a very sideways manner before taking off. But we can see really points of support right in here. We also definitely have points of resistance right here, because as you see, as they brought the market up today, they were able to break it up just below the 1252.78. I believe the high was around 1251 today, but it's now coming down, now trading at about 1239. Now you can really see how this market has come off of the highs in trading today. We're looking at a 4-hour chart, 240-minute chart. We absolutely, in terms of candlestick pattern right now, have a dark cloud cover. It opens at and looks like it's going to close at or below the midpoint of this long green candle here. But what we're really seeing, I think, more than anything else, is this resistance coming in right at around 1250. Now, of course, we're using very short-term studies, a half-hour, 4-hour bar charts or candlestick charts, to look at that top. But when we start to compress it, and that's what we've done here, this is a 720-minute chart, roughly a half a day candlestick chart. When we do that, what really becomes apparent is that this market is trading almost sideways at this point, in that we can look at really strong support. This is 1225 right in here. Of course, you get a couple of moments in which it does dip below there, but for the most part, it's trading above this particular price point. Then if we look at our resistance now, this is 1240, this is 1257, so we'll use the 57. And there's no doubt when we look at it through a longer term chart, what we're seeing is as follows. This market seems to be trading defined within this range. So it tends to move to the upper end of the spectrum or the range and then simply move down. Now we're really getting closer and closer, of course, to the holiday season. And as we do that, I expect volume to really begin to evaporate, to erode within the marketplace. And this very, very light volume really gives substantial traders that are looking to take advantage of this the opportunity to really move the market because there's just not that much volume in there and it's easier to do. That being said, as of right now, I still believe that this market's probably going to trade within this defined range, 60 at the top, call it 20 to 23 on the bottom. I've got it marked at 25 on the other chart. But this particular range, I think, is going to be where we find gold trading over the next week. Now, what's the caveat? The caveat is we've got some real support in here, but it's also real resistance in here. If we were to get any kind of an upside breakout, it would absolutely first have to break above this critical area of 1260 before in any way I could look at the recent activity as bullish. Now, we're not that far from there. We're only about $20 from there, but nonetheless, we would have to see it move up and not back down as we have seen it do over the last week or so. Now, if you recall, on Friday, we did identify a bullish candlestick pattern simply called a piercing line, and we are getting somewhat of a confirmation, but not really, because to have a true confirmation, I believe, on a piercing line, the hardcore definition is a green candle with a higher high and a higher low. And that's why I said we're actually getting that, because we have a higher high, we do have a higher low. We also have a green candle, although it's very, very slightly green. I would much rather see a body size like we're seeing right here, or even a large body, but this is such a narrow body right now that although it technically meets that criteria, it does it extremely weak. So traders, how does that fit into our big picture right now? Well, I'm absolutely still under the belief that we are in the fifth wave of our bear count in terms of our current Elliott wave count. Wave 3, wave 4, and I believe we're in wave 5. Within wave 5, I believe in most likelihood, we are still at that 3. We might be forming our fourth right now, so we'd have 1, 2, 3. And you notice that we are getting these really, really small body candles. It's significant in that it could be indicating some sort of pivot point. I would expect wave 4, and then a final wave 5. I would expect wave 5 to maybe even come and test 1181. Or anywhere above 1154. This is a 61% retracement, but it's from a very, very large retracement sequence, which starts at about 750 all the way up to 1900. And that's why it's so important, because it's such a long-standing resistance line, or excuse me, support line. So I wouldn't be surprised to see the market clip up a little bit and then have one final lunge down. Now, once that happens, we will go into our ABC corrective period. And really, to look at the ABC in terms of where the market might go, we, again, go right back to Fibonacci retracement. Now, over this last weekend, I have been beginning our Outlook 2014 in terms of where I think this ABC might take us to through the first quarter of next year. And to me, the simplest way to do that, of course, is going to be a fib retracement. So what I've done here is I've got a fib retracement starting from 1800. This is the top that we had just prior to gold's fall from grace. And when we do that, we're going to find a couple of interesting things. First of all, a 23% retracement of that move takes you around 1,300, and a 38% takes you to around 1,400. Now, interestingly enough, look at the top of this particular market. It lines up quite eloquently. These bottoms right here do not so much, but here's my sense. In terms of an ABC correction, and I'm marking our low right here at 1150. So what I'm making the assumption is that we're going to have one more clip up, a final clip down, then we're going to go into our ABC correction. I wouldn't be surprised to see a minimum of 1,300 and as high as 1,400, because that would be a 38% retracement of this entire move, and that's pretty logical. Now, realize you can get it to go much higher. You could have a 50% retracement. But for right now, I would much rather look at something much more conservative and have the market outperform our estimates than really underperform our estimates. But in essence, this is what I would be looking at. So once we saw the market go to 1150 and we saw that we're back into that ABC, we've got, I think, at minimum, a $150 trade in which I think we should be able to extract anywhere between $70 and $100 out of that particular trade. So in essence, I'm looking at our weekly chart. What we could be looking, and realize that this is just a sketch of a particular model, but we have 3, we have 4, we get 5, goes to a new low, which is that 1250. Then we get an A, a B, and some sort of C, taking us anywhere between 13 and 1,400. That's what I would look at for the first part of 2014. Now, we've seen silver react much more dynamically, of course, than gold. We've talked about this infinitum in that it tends to be a percentage gainer when the market's moving up and a percentage loser as compared to gold when the market's moving down. We're certainly getting that today. As you can see, it's up over 1%. It's trading just below $20 per ounce. We have identified different bands of resistance, but 2030 is the one that I want to watch right now. And I believe that we should see support at around 1940 to 1935. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.